So nobody really wants to pay more in taxes than they have to, and so for that reason, Qualified Charitable Distributions, or QCDs, have really become pretty popular in the last couple years. A lot of people have heard about QCDs, but they're not really sure really how they work or how they can benefit them. Essentially, they're ideal for people who have saved and have done a great job of saving over the years, and they've got a significant amount of their net worth in these pre-tax 401ks or pre-tax IRAs. And so once you're 70 and a half, you can instruct the custodian of your IRA to send a check directly from your IRA to your church or to your nonprofit, and that money is not going to be taxable to you. You can give $100,000, up to $100,000 per year from your IRA to nonprofits. Also, any amount that you do give is going to count towards your required minimum distribution. But even though the minimum distribution age is 73, you can start making qualified charitable distributions at age 70 and a half. So for instance, let's say you've got $2 million in your IRA and your minimum distribution is $80,000 this year. You could give any portion of that $80,000. So let's say you gave $40,000 to your church, and then the other $40,000 you just send to your bank account and you pay tax on. So there's some important things to consider when looking at QCDs. First off, you want to make sure that the money goes directly to the nonprofit and then it never hits your bank account. If you send the money to your bank first and then write a check to the nonprofit, that is not going to qualify and you will pay tax on that money. But you should be able to fill out a form with the custodian of your IRA, and then they will just cut a check and send it directly to the nonprofit. It's also important to know that the custodians are required to report the distributions as taxable, even though they are not actually taxable. Because really it's not the custodian's job to know whether or not your church is meeting all of their requirements to be a 501c3. So the IRS does require that they report that as taxable. So make sure you keep track of your QCDs and then let your accountant know so that when you file your taxes, you're not paying any more tax than you have to. So you've faithfully stewarded your money all these years by putting money in these pre-tax accounts that you have. And so now that it's time to withdraw the money from these accounts, let's continue to steward that money wisely and make sure that more of the money that you have goes to your favorite nonprofit and not to the IRS.